Welcome back to the Sunday Report. The market sentiment is still in the trash and rumors are running rampant. Let's go ahead and break some of these down and talk about what's going on. Now, if you want to see charting, make sure you go to last week's Sunday Report. I think all of those still hold up right now, and I don't see any need to reevaluate those. I will say that I am leaning towards the more bearish outcome that we talked about. So I think a revisit to the COVID highs could be the higher probability at this point, seeing how weak the market truly is, how it keeps wanting to turn over. So we want to look for this level here, right about the 330 range, 340 range. And I think that's where this market could be headed. And in the short term, because remember, we're still going to look for that election rally. But go ahead, check out the last week's video if you want to talk about that. Now let's dive into some of these rumors that are running rampant in the market. Now we know the Nord Stream 2 pipeline has been shut down, but the rumors are running rampant on who exactly set off the explosion that caused it to be shut down. Was it Russia? Was it Europe? Was it the US? Was it China? And this clip of Biden has recently been blowing up, and people are saying that America must have done it.
If Russia invades, that means tanks or troops crossing the border of Ukraine again. Then there will be no longer a Nord Stream 2. We will bring an end to it.
How will you do that exactly, since the project and control of the project is within Germany's control?
We will, I promise you, we'll be able to do it.
Now, lots of people are using that clip as justification for why the U.S. is to blame for the explosion that shut down the Nord Stream 2 pipeline. They think it was a covert operation. The U.S. went in and set it off to punish Russia for invading Ukraine. But those same people are also the ones that are saying, oh, Biden can't even put words together. He has no clue what he's saying. We're not even sure if he's competent. And so I think you have to take it with a grain of salt. He might not even know what he was saying. He might have just wanted to sound powerful, or like he did have a path that he could take to ensure that there could be punishment against Russia. However, you have to consider that the Russians could have done this as well. The Russians could have set off their own pipeline knowing that they were likely not to get blamed for it and to cause all this mass confusion. Remember, that's a path that they take a lot, especially when it comes to invasion of social media with different bots and stuff. Cause confusion, cause disruption, and make chaos. That has been a strategy used by Russia and China quite a bit. Doesn't seem like a clear indication that we're actually at fault here. But what does seem clear to me is that Europe is screwed, especially Germany and France. We're talking about the third largest economy in the world in Germany. If they start having the economy go into turmoil because of this energy crisis, because their energy prices get so high, they can't afford to keep businesses open. People can't afford to keep the lights on because it costs them so much on their bills. That could be catastrophic. And so we're now at a point where we have to think, okay, what happens next? Obviously, the government's probably going to have to print a lot of money to bail out these businesses, to help individuals. And then what? We're going to have a debt crisis? That's a serious thing to have to consider. We're talking about the third largest economy. U.S. does not want Germany to fail. We might even step in and have to help them. And you have to also think about what's going to happen to the U.S. dollar. Where's most of this debt going to be denominated in? Probably USD, which even brings more fundamental basis for the dollar milkshake theory, which we've talked about a lot, where, hey, the U.S. dollar keeps going up and up and up, and there's a rush for more dollars because of the scarcity. There could be a global financial collapse. And at that point, I'm going to be feeling really comfortable about the crypto that I'm holding, and I'm going to probably start considering gold and silver as well to add to my portfolio. And I hate holding minerals. Like, really, really hate holding minerals. I want to own companies, not rocks, because someday I want to own rockets, and I'm not going to get rockets if I just have rocks. And since we're on the topic of energy, I think it's important to throw crypto mining into the conversation. Now, there was lots of rumors. Elon even contributed to these, saying, well, see, it's not safe for the environment for all this mining to occur. But you have to think about incentives. As a business person, we think about incentives. What is the incentive? Now, you might say, well, energy is really tight. There's no incentive for us to mine these. But you're mining literally money. Now, if the incentive that you get from using your electricity to get a currency is to make the energy as cheap as possible so that it is as profitable as possible, then obviously the incentive would be to create the cheapest energy source that you can. The incentive here isn't a negative one. It isn't one that will hurt the environment. Naturally, people want you to use cleaner sources of energy. We've seen the free market do that on its own without the need for a government to step in and be just a huge burden on everyone in general. Now, what is the best energy source? Well, nuclear energy. So if we follow that path all the way down, all right, so we have an incentive structure for the first time ever in history that says, hey, the cheaper the energy is, the more profitable it is for you directly. If you can get your energy as cheap as possible, you can then mine actual money that you can then spend in the market. And even people talk about, oh, well, there's nothing that backs crypto. It's like, well, obviously what's backing crypto is that you found a way to turn energy into money. That's what backs it. Lots of people say, well, the dollar's backed by oil. What's better than that? Well, how about a currency that's backed by any type of energy? Doesn't matter where it comes from. Nuclear energy, or even better types of energy that could come out in the future, like instead of using uranium, using thorium, which I've talked about in the past, is even better than uranium. I've been doing some research into that. What a great dive that was. Thank you everyone on TikTok that blew me up with comments about it. But that path all the way down the line, if you can get energy next to zero, the economy can boom and you can have that incentive there built for it. You have to think about that. That's the only real thing that's going to matter. Yes, we do it in a very stumbling our way to trying to figure out how to do the mining. And right now, it's not an environment that's very conducive to mining because it's not very profitable unless you could build a huge warehouse for it. It doesn't really help the individual. But that's also short-term thinking. That's people saying, well, I need to have the profit right away so I can get an instant return. That's not people thinking, well, if I just do it now, yeah, it's not going to be very profitable for me, but what else am I going to use this PC for? If I can build it up now and then it ends up profiting for me because it's cheaper now to get it now than it will be for the inflated price in the future when there's more competition. See, people are not thinking about this in long term. They're thinking, I need an instant return. I need that return fast. And that's how a lot of people treat everything. There's not a lot of people with a long-term mindset of, well, actually, if I factor in the time and the appreciation over time, if I hold it and the more competitors that will be in the market and the mining process right now, and actually is a little bit cheaper for me to do this now, I don't see any of those equations. I only see the equations for, well, how much does this make me in the next 5 minutes? Which is a little ridiculous, especially when you have an invested mindset. These are people who are trying to trade or people who are trying to make side gigs and side hustles and only thinking short term, which, I mean, if you're running a side hustle, you're creating content or whatever it is you're after, you need to be a fast, active doer in the short term, but it's essential for you to have a long-term mindset of like, well, this will take me years to get to. I'm going to be panicked in my minutes. I'm going to work harder in the next minute, but I'm going to think in years when it comes to what goals I want to accomplish. Now let's hop into the Discord and see what all of their news is going on. Just a small reminder, we have lots of bots that track news headlines, as you can see here. If you go to the little bot that says headlines, you can find these here. This immediately snags all the major headlines. No, it does not track CNN because why are you listening to CNN? I've never once in my life read a news story and been like, I wonder what CNN or Fox News thinks. No, okay? That's not where you want to get your news. We only track the news sources that matter, that just say the information, not any clickbait headlines. And even better than that, we have a newsroom here where we select news out of it and then post it for you so that you can see what we think is actually important as people who are traders. So let's talk about these rumors that are being posted, being shared by Marlo, who's been really in tune to the story. We see that a large investor that deals with Credit Suisse says the investment bank is a disaster, CDS trading like a Lehman moment about to hit. Now, lots of you might be wondering, okay, what is Credit Suisse? Well, okay, this is a global bank that contributes a huge portion to the amount of trading done in the Forex market. That's the currency markets, all right? And they're the main counterparty to the Fed. Now already in my mind's at, okay, who's this large investor? Did they make him mad and now he wants to slander them? We see this a lot. If a large investor gets burned by a company from the performance, they'll try and sue just because they're mad. And people will see that lawsuit and be like, oh, this is terrible for the stock, even though it's just literally just like a rich little kid throwing a temper tantrum and doesn't really have any significant impact. So it's hard to say, is that what's occurring? Or is this a more serious issue considering how crazy the Forex market is? It definitely seems like there could be some justification to some more severe problems going on with Credit Suisse. Now, what that could mean as the greater impact, Well, it's really hard to speculate. Even if I was to dig and do a bunch of research, I couldn't even really speculate on what that would be. However, it's important to keep that in mind, and it could be another reason why you want to leave some hedges open. Even if we think we're pretty much near the bottom of the market, this could be another plummet. It could cause more chaos in the currency markets. And I think right now, it's just important to be aware that that is currently going on. And for the last rumor that I wanted to talk about, we've seen a lot of different news sources report on this, but credible source says a major international investment bank on the brink of collapse. Now, this is a really interesting one, and it requires a lot of speculation. We're pretty much in a global recession. I mean, I started the year off at the beginning of the year. Okay, that's not now. At the beginning of the year, I did a video covering which countries were most susceptible to systemic risk, which ones were carrying the most probabilities of black swan events from total financial collapse. And that list was pretty concerning. The US was even pretty high on that list, and that's with our banks having strict regulations that were set ever since '08. These banks are following pretty stringent practices to make sure that that never happens again. So if we extract the overall sentiment that the headline brings, rather than focusing on, okay, which bank is it, we can really consider, wow, there's going to be a lot of pressure under financial institutions, and they're going to be under heavy stress, and some of them likely are going to break because these are conditions that they've never seen before. We've never seen energy prices climb this high in such a short period of time. The dollar's at record highs. Currency markets are going crazy. This is a huge paradigm shift. So we're going to need to be prepared and keep a close eye on any future headlines that come up. And let's break down the economic news for this week. Remember last week I said, hey, the market's been ignoring the Fed, but I don't think that'll continue. And it's exactly what we saw play out last week as there was many market reactions to the actual Fed. Now, ISMs comes out on Monday. It's going to be a big deal. And we open and close the day with plenty of Fed speeches. So Monday is going to be a huge day. Also keep an eye out for, I thought it was Tuesday, but maybe it's Wednesday. Wednesday, there we go. Our ISM non-manufacturing data as well. These will be the big 2 days for this week. Not much else really going on. Unemployment will be interesting, but unemployment numbers have managed to keep low. And remember, unemployment numbers are going to be a lagging indicator for the recession. So when we see those unemployment numbers start to tick back up aggressively, we're going to know, hey, we're likely towards the end of the recession. We're not going to use that as an indicator right now. It's not really going to give us much information. So that's what I'm looking forward to this week. And I will also say that for the job openings, we're going to do a special video on what's been going on with the job openings, why they continue to climb, and what it can mean about deflation. So make sure you like and subscribe to the video. Maybe hit that bell so you can keep up with the alerts. And we'll talk about that more in the future, likely this week. And that's it for the Sunday report. I hope you enjoyed it. We didn't do a lot of charting, not a lot of stock picking, talked about some news. That's because I think last week's report still holds up very well, and I didn't see a need to update that. So make sure you like and subscribe so you don't miss next week's, or you don't miss all the shorts that I'm about to put out on stocks that I do like, and there'll be lots of other interesting bits and information there that I think you'll enjoy. Anyways, I'll see you next week, and I hope you found this helpful.